Hello students, this is Mrs. Jennifer Cruz from Lilavati, Lalji, Dayal, College of Commerce. And in today's class, students, we are going to study OCM, chapter number 4, Business Services. Okay, so before starting with this interesting chapter, students, let me tell you all that the total weightage of this chapter is 27 marks with option and 20 marks without option. Let us now begin with this interesting chapter. So students, let us first understand the types of business services. So you can see there are 5 types of business services, that is banking, insurance, warehousing, communication and transport. We need to study each one of them in detail in this chapter. So let us now come to the first one, that is banking. Okay, so what is banking? Banking is an institution which deals in money or credit. Okay, it accepts deposit from the public, it grants loan and advances to those who are in need of funds for various purposes. It also encourages the saving habit among individuals. Let us now study, students, the types of bank. So here, okay, the first type of bank is the central bank. So central bank is the apex financial institution. Okay, the RBI is termed as the central bank. Then we have commercial banks. So commercial bank, students, they play an important role in the economic and social development of the country. And under commercial bank, you have 3 banks: public sector, private sector and foreign bank. Third one is cooperative bank. Okay, so it is registered under the Cooperative Societies Act. Okay, its main aim is to provide, okay, financial aid, credit to the economically weaker section, okay, to the economically backward people. Next, now under Cooperative Society Bank, students, we have 3: Primary Credit Society, District Central Cooperative Bank and State Cooperative Bank. Then we have the fourth one, Industrial Development Bank. Okay, now what is Industrial Development Bank, students? They are the financial institutions which provide long-term and medium-term funds, okay, to business enterprises. Next we have Exchange Bank. Now what is Exchange Bank? So it facilitates foreign exchange transactions. Okay, all the exchange banks, they facilitate foreign exchange transactions. Then we have Regional Rural Bank. Okay, so these banks are sponsored by large public sector banks. Okay, so especially to promote, the rural sectors. So we have these banks. Next one is saving bank. Okay, so the main aim of the saving bank is to encourage the habit of saving among people. Next one, we have specialized bank. Okay, now what is specialized bank? Your students, these banks, okay, the main aim, okay, they provide financial and advisory assistance to the customers. Last one, we have investment banks. Under this investment banks, these banks cater to the requirement, okay, and they provide overall support for setting up the business. Okay, and under investment bank, we have the Exim Bank, that is the Export Import Bank. We have SIDBI, Small Industrial Development Bank, and NABARD, that is National Bank for Agriculture and Rural Development. Okay, so here we studied the types of bank. Let's have a quick recap: central bank, commercial bank, cooperative bank, industrial development bank, exchange bank, regional rural bank, saving bank, specialized bank, and investment bank. So students, you need to remember these 9 types of banks very well. Let us move on to the next answer of this chapter, and that talks about functions of commercial banks. Okay, so just remember, students, there are 2 main functions of commercial bank. First one is primary function, second one is secondary function. So under primary functions, you have accepting deposits and granting loans, and in secondary functions, you have agency functions and utility functions. Let us now study the primary functions of the bank. Okay, so here in students, the first function is accepting deposits. Okay, so accepting deposits. Now here you can see on the screen there are 2 types of deposit. First one is time deposit, second one is demand deposit. Now what is time deposit, students? Time deposits are to be paid after a certain period of time, after the expiry date, okay, on the maturity date. Demand deposit, you can say they are repaid as per the demand of the investor. Now students, under time deposit, you have fixed deposit and recurring deposit. Fixed deposit is kept fixed for a particular period of time, and recurring deposit, it recurs again and again. Next one is demand deposit. You have saving account, current account. Saving account, normally the individuals who want to save, okay, the money to the bank, they open a saving bank account. Current account is normally opened by businessmen. Then you have the second function, that is granting loans and advances. So there are two types. First is granting loan, second is advances. So granting loans, you have three types of loan: short-term loan, medium-term loan, and long-term loan. So short-term loan ranges from 0 to 1 year. Okay, medium-term loan will range from 1 to 5 years, and long-term loans will range from more than 5 years. Then in advances, you have cash credit, you have overdraft, okay, and you have discounting bill of exchange. So here you have the short synopsis of the primary functions of bank. Let's have a quick recap. Two functions: accepting deposit, granting loans. Two types of deposit: time deposit, demand deposit. Two types of loan: loans and advances. Now under time, you have two: fixed and recurring deposit. Under demand, you again have two: saving and current. Loan, there are three types of loans: short, medium, long. And advances, there are three types of advances: cash credit, overdraft, and discounting bill of exchange. Let us now move on to the secondary functions of the bank. Okay, now secondary function is again divided into two parts: agency functions and utility functions. Okay, so agency functions, okay, it includes periodic collection and payment, portfolio management, fund transfer. Okay, so what is I'll just tell you the meaning of portfolio management. So here, if the company wants to sell or buy the shares or the ventures on behalf of its client, that is termed as your portfolio management. Then you have fund transfer, dematerialization. So dematerialization means conversion of your physical form of share certificate into electronic form. It's termed as dematerialization. Next is forex transaction. That is transaction between foreign countries. Okay, is forex transactions. Then the utility functions that are there, students, is issuing of draft and check. We have locker facilities, project reports, gift checks, underwriting services, and gold-related services. So two functions: agency and utility. Under agency, periodic collection on payment, portfolio management, fund transfer, dematerialization, and forex transaction. And under utility functions, you have issue of draft and check, locker facility, project report, gift checks, underwriting services, and gold-related services. Let us now move on to the next topic, that is e-banking. Okay, now E stands for electronic banking. So e-banking, students, refers to electronic banking. Okay, it is also called as virtual banking or online banking. Okay, so which is also again termed as internet banking. Okay, so it is simply using electronic and telecommunication network for delivering various banking products and services. Let us see what e-banking services that are there into your textbook. So first, we all are aware about this e-banking services. You have the ATM facility, credit card facility, debit card facility. Then you have RTGS, real-time settlement, gross settlement. Okay, so real-time gross settlement is RTGS. Then you have NEFT, that is National Electronic Fund Transfer. You have net banking and mobile banking, and you have IMPS, that is immediate payment services. So these are the functions that e-banking offers. Let's move on to the next slide, and that talks about insurance. Okay, a new topic. So we've covered up, initially we've started with banks. Okay, we've covered up with banks. Now we move on to the second business services, that is insurance. Okay, now what is insurance do? So insurance is a protection against financial loss arising on the happening of an unexpected event. Okay, it is a form of risk management, you can say so, primarily used to hedge against the risk of a contingent or uncertain loss. Okay, so basically insurance is a contract between the insurer and the insured, whereby the insurer agrees to compensate the insured against the loss. Now, very important concept that you need to remember, students, and that is the principles of insurance. Okay, so here, students, in the principle of insurance, we need to understand these 7 principles that are there. So very important answer, you may say so. So first one is principle of utmost good faith. Okay. So here the insurer and the insured must disclose all material facts clearly, correctly, and completely. There must be utmost good faith between both of them. Next one, principle of insurable interest. So what is insurable interest, students? The insured must have insurable interest, okay, financially as a subject matter of insurance. The subject matter should be insurable interest, that is money. Third, principle of indemnity. Now, your indemnity means a guarantee or assurance, okay? The insurers agrees to compensate the insured for the actual loss suffered, okay? It is applicable for all three, like for fire, marine, and general insurance. It is not applicable to life insurance, okay? Because your indemnity means a guarantee or an assurance to bring back to the same situation that you were before. So for life insurance, if the person is, if the person has died, you cannot bring a person who's died back to life. So it is not applicable to life insurance. Next one is principle of subrogation. Okay, so after the insured has compensated for the loss due to property insured, then the right of ownership of such property passes on to the insurer. So once the insurer has paid, has compensated, then the right of ownership that is there passes on to the insurer. Okay, so this principle is applicable only when the damaged property has certain value. Otherwise, what property will he own? Okay, so if the damaged property has some value, okay, after the event causing the damage, then only this principle of subrogation is acceptable. Next one, you have principle of contribution. Okay, so this is applicable when the insured has taken out more than one policy for the same risk. Okay, the insured can claim the compensation only to the extent of actual loss, either from any one insurer or all the insurers. Okay, so if you have taken more than one policy, okay, the insured, okay, can claim compensation only to the extent of the loss that has been occurred. You cannot take more. Next one is principle of causa proxima. What is causa proxima? It means when a loss, okay, by more than one cause happened, the proximate cause should be taken into consideration to decide the liability of the insurer. So if the loss has been occurred because of 2-3 reasons, but the nearest cause why the thing has happened should be taken into consideration. Next one is the principle of mitigation of loss. Your students, the insured must try to minimize, okay, the loss of the property, okay, in case of any certain event. For example, if there is a fire outbreak, so necessary measures should be taken, to stop, to take control over the fire that is taken place. So, your students, just remember, just have a quick recap on principles of insurance: principle of utmost good faith, principle of insurable interest, principle of indemnity, principle of subrogation, principle of contribution, principle of causa proxima, and principle of mitigation of loss. Okay. Now, your students, let us see the types of insurance. Okay. There are 3 types of insurance: life, marine, fire. Let us now understand each insurance in detail. Okay, so first we have life insurance. Okay, so what is life insurance, students? Under life insurance contract, the human life is insured against death, old age, sickness, or accident. So it is a contract between the insurer and the insured, whereby the insurer agrees to compensate the insured a certain sum on the expiry or on the death, whichever is earlier for a consideration. Okay, so life insurance is related to a life of a person. The second insurance, students, is marine insurance. Now, marine insurance gives protection against the losses caused, okay, due to the dangers of the sea, okay, due to the perils in the sea. It is a form of insurance contract covering loss or damage to the vessels or to the cargo or to the passengers during marine transportation. Now, all principles of insurance are applicable to marine insurance contract. Let us now study fire insurance. Okay, so the fire insurance, students, it protects the insured against the risk of fire. So a fire insurance contract is an agreement whereby the insurer, in return for consideration, undertaken to indemnify the insured against the loss of property due to fire. Okay, so these are the 3 types of insurance: life, marine, fire. Now, students, we shall study the types of insurance policies in detail. Okay, so this is an important answer for you all. Any one insurance policy can be asked, or this can be asked as a short note answer. Okay, they can ask you as a short note answer, or even in distinguish between this answer can be asked. So first, let us study life insurance policy. Now, first one, whole life policy. Your students, the whole life of a person is insured. The insured, okay, cannot receive money from the insurance company till he is alive. So this is given, okay, to the nominee once the in case of the death of the person. Next one is endowment policy. Now, your insurance is taken for a specific period. Okay, so your the sum is assured along with the bonus. Okay, it is then given to the it is then given on the death of the insured to the dependents who are there. Next one is, students, term insurance policy. Okay, so this is taken for a specific term. Term insurance policy is being taken for a specific term. Then you have annuity policy. Okay, now here in annuity policy, the insured, okay, has to pay the premium in lump sum, okay, over a certain period of time. So that is an annuity policy. Next one is money back policy. Okay, now here in money back policy, students, basically the money back policy provides a regular percentage of the sum assured during the lifetime of the policy. So that is termed as money back policy. Next one, you have child insurance. Okay, so it is a saving come investment plan designed to meet the child's future financial needs. So that comes under child insurance. Then you have retirement plan. Okay, so it is a saving and investment plan that provides the insured an income during retirement. Next one, you have the ULIP policy, that is unit linked insurance plan. So it stands, it is very popular as all the insurance benefits are linked with mutual funds. Okay, so with this, students, we've completed the life insurance policies, and let us have a quick recap on the life insurance policies. So we have the whole life policy, the endowment policy, term insurance policy, annuity policy, money back policy, child insurance policy, retirement plan, and the ULIP policy. Okay, now the next type of insurance is marine insurance policy. Now, first policy under marine insurance is voyage policy. Okay, so the subject matter is insured for a specific voyage, students. Okay, irrespective of the time involved in it. Second one is time policy. Okay, the subject matter is insured for a definite period of time. Mixed policy, so it is a combination of voyage policy and time policy. Then you have valued policy. So here students are good at insured for an agreed value between the insurer and the insured at the time of taking the policy. Then, students, you have blanket policy. Now, what is blanket policy? It is basically, taken for maximum limit for a required amount, okay, for protection of, the full amount. You get the full amount along with the premium in the blanket policy. Then you have the sixth policy, that is port risk policy. So it covers all types of risk, okay, in the vessel while it is anchored at the port for the part-time, okay. So basically, it is the port risk policy. Then you have composite policy. What is composite policy? It is a policy, okay, in which if you purchase from more than one insurer, this policy is purchased from more than one insurer. That is composite. Then you have single vessel policy, okay. So this policy, students, is suitable for a small ship owner having a single plan. Last one is the fleet policy and the block policy. So your students, several ships, okay, belonging to one owner are insured under the same policy. So that is fleet. Fleet means several ships under the same policy. So let's have a quick recap on the marine insurance policy, students. So under marine insurance policy, we first have the voyage policy, the time policy, the mixed policy, value policy, blanket policy, port risk policy, composite policy, single vessel policy, and the last one is fleet policy and the block policy. Now let us come on to the last answer, last insurance policy, that is the fire insurance policy. Now, what is fire insurance? The various types. Let's study, students. First one is valued policy. So, what is valued policy? So, under this policy, students, the value of the subject matter of the insured is agreed upon at the time of making a contract. Okay? So, the value of the matter is agreed as insurance. Second is the average policy. Okay? So, here, if the subject matter is not insured as per the exact market value, then the insurer is liable to pay a particular percentage of the loss which has been taken place. Specific policy, third one. So here the property is insured for a sum, okay? It is for a specific sum, you can say so. Next one is floating policy. This policy, students, is taken for one sum. You have one sum and one premium for all the goods that are lying at different places. Okay, so if your goods are lying at different places, you are getting insurance for one sum and you have to pay one premium only. Next one, students, is excess policy. Okay, so as I told you, floating policy you get one sum. Now you're in excess policy when the value of goods fluctuate, then excess policy may be taken into consideration by the insured. If the value of the goods goes up and down, that is the time when you take excess policy. Next one is reinstatement policy. Okay, so herein the insurer, students, undertakes to replace the property, to replace the loss that has been caused by fire. Next one is comprehensive policy. Okay, so this policy, it covers a lot of risk. Okay, so it covers a lot of risk that is under single policy. So it is comprehensive, many risks under single policy. Then you have consequential policy. So this includes loss of tangible and intangible goods that are there. So consequential can be a tangible good or an intangible good as well. Last one is sprinkler leakage policy. So it is caused by the leakage of an automatic sprinkler system. So if there is a leakage, you can enroll in this sprinkler leakage policy. Okay, so let's have a quick recap of fire insurance policy. So we have value policy, average policy, specific policy, floating policy, excess policy, reinstatement policy, comprehensive policy, consequential policy, sprinkler leakage policy. Now let's move on to the last part of this answer, and that talks about warehousing. Okay, so what is warehousing? Warehousing refers to storage of goods and consists of all those activities which are connected with storage and preserving of your goods. Okay, so it is a mean of storing the goods. It is a group activity connected with the storing and preserving of stored goods from the time of production till the time of consumption. Okay, so now students, we shall see what are the functions of warehousing. Okay, so again, students, this answer is very, very important from the examination point of view. Okay, so let's study the functions of warehousing now. So first function is financing. Okay, so here in students, in financing, you can say so that if you want loans, loans can be raised from the warehouse, to they can keep as a loan. Your warehouse can be kept as a loan by the financial institution against the goods that are being stored by the owner. So you can raise loan from the warehouse. So warehousing is a useful thing when financing comes in. Second one is risk bearing. Okay, so here in students, when the goods are stored in the warehouse, they are explored, they are expected to many risks. Okay, so warehouse can be constructed, they are constructed in such a way that they minimize the risk. Third one is storage. Okay, so here in students, the basic function of warehouse is to the surplus commodity which is there, which is not needed, can be stored into the warehouse. So storage is the function. Next one is transportation. Okay, so the fourth function, it provides transportation facility to the bulk depositors also. Then The fifth one is time and place utility. So this warehouse, it creates time utility by preserving the goods, okay, till it is demanded, and place utility by providing goods at different places. Then students, we have grading and packaging. Now, here in students, warehouse, it facilitates packing, processing, grading, okay. So it facilitates all these things also. It gives grades and it does the work of packing also. Next one is price stabilization, okay. So here in students, the warehouses that are there, they are helping in determining the prices, okay. Certain commodities that are there, they are not consumed in the form that they are produced, but these, they are processing is required to make them consumable. So certain warehouse undertake this activity, okay. So basically processing is done by the warehouse. So with this, students, we've completed the functions of warehousing. Let's have a quick recap. If you want to remember the code word, it's first GP. So FRST. So you can say first GP, first group. So F stands for financing, R stands for risk bearing, S stands for storage, T stands for transportation, G stands, one more T, you have T square. T stands for time and place utility, G stands for grading and packing, P stands for price stabilization, and the last one stands for processing. Okay, so functions of warehousing is very important. Let's move on to the next answer, and that speaks about types of warehouses. Okay, so students, here in this types of warehouses, you can see there are 7 types of warehouses that are there. So let's study each one of them in detail. So first type of warehouse, students, is the private warehouse. Now, what is a private warehouse? Okay, so your students, they are owned and operated, okay, by big manufacturers, private manufacturers, to fulfill their own storage needs. Second one, you can say public or commercial warehouse. So it is a specialized business that is established, okay, to provide storage facility to general public, okay, for they charge certain thing and provide storage facility to the general public. Third one is the bonded warehouse, okay. They are licensed by the government, and why they are licensed by the government? To accept, okay, imported goods for storage until payment of custom duty. So till the custom duty is paid, so their goods are stored in the bonded warehouse. Next, the fourth one is duty paid warehouse. So if the importer student faces any problem in transportation of goods after making payment of duty, then such goods can be stored in duty paid warehouse. Next one, we have government warehouse. So they are owned, managed and controlled by the central and the state government, okay, or even the public authorities. Next is cooperative society warehouse. So these are owned, okay, owned, managed and controlled by cooperative societies, and these warehouses, students, they charge very economical rate. The last one is cold storage warehouse. So cold storage warehouse, students, it provides facilities for perishable commodities. Okay, what is perishable? That gets spoiled very easily, like fruits, vegetables, any dairy products that are there. So these can be stored in the cold storage warehouse. So 7 types of warehousing. Just have a quick recap over it. Private warehouse, public warehouse, bonded warehouse, duty paid warehouse, government warehouse, cooperative warehouse, and storage warehouse. So even this answer is important, students. So students, you will be wondering why transportation and communication is still not come, because this time transportation and communication is coming under the reduced portion, okay. So in that 25% of reduced portion, this time the transportation thing and communication is not there for your exam. So 2 bank services are reduced in this board exam. So you need to understand banking, insurance, okay. You need to understand warehouse very, very nicely, okay. So banking, with banking, you need to study the types of bank, okay, the functions of bank, okay. Then in insurance, okay, in insurance you will study the main thing, that is the principles of insurance, the types of insurance, the types of life insurance policy, the types of marine insurance policy, types of fire insurance policy. And under warehouse, you will study the functions of warehouse and the types of warehouse, okay. So with this, students, we've completed this chapter. Thank you.